Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning, it's Friday, December 5, and this is your London Open Brief. Three themes stand out. India has eased policy as growth signals soften. The US dollar is on the back foot ahead of key inflation data and next week's Federal Reserve meeting. And the yen is firm as markets price a more hawkish turn from the Bank of Japan. Starting in Asia, the Reserve Bank of India cut its policy rate by a quarter point to 5.25%, flagging weakness in some key indicators. The move was widely expected, and, in the immediate aftermath, the rupee slipped as USD INR nudged higher on the dovish read. Meanwhile, in Japan, speculation of a rate hike at the December 18 to 19 meeting has intensified, helping the yen hold near a three-week high, even as domestic data showed a sharp drop in household spending. Traders read recent Bank of Japan messaging as a nudge toward tightening, though officials are still signaling a cautious path. China's central bank set the daily yuan fix close to market estimates, a sign it's comfortable with current levels and aiming for currency stability ahead of important economic policy meetings later this month. Across the region, risk sentiment stayed contained, with Asian equities mixed and investors waiting for the next catalyst. Turning to the US, the dollar's rebound has faded, with the dollar index lingering near multi-week lows as markets look to the personal consumption expenditures inflation report later today. Weekly jobless claims surprised, but holiday effects likely distorted the signal. US stocks finished mixed and futures are edging higher, with benchmarks creeping toward record territory. Still, with the Fed decision just around the corner and a rate cut widely anticipated, positioning is cautious. And a quick reminder, there's no U.S. payrolls report today. It's been pushed to December 16th. On commodities, gold is edging higher on expectations of a dovish Fed, though it remains range-bound into the data, and silver is firmer after a brief pullback from recent highs. Copper's momentum has picked up on electrification and artificial intelligence demand narratives, while oil is a touch softer. In India, local gold prices are also higher this morning. In Europe, the policy backdrop stays complicated, with debate over energy costs and green targets resurfacing, Greek farmers pressing Brussels over subsidy issues, and Denmark's defense preparedness under scrutiny. Trade friction also features, with Korea's trade chief calling recent changes to EU rules challenging. For markets, the signal is that policy and competitiveness questions remain in the mix as we head into year-end. For market and sector focus, a softer dollar and steady risk tone are supportive for pro-cyclical currencies. The Aussie is revisiting two-month highs against the US dollar. Sterling holds a constructive bias ahead of the US data, and the Swiss franc is a touch firmer, with USD CHF slipping as Fed cut hopes build. USD CAD is marking time before Canada's jobs numbers, and precious metals are getting a gentle tailwind from the dollar drift. Looking ahead, today's focus is the US PCE inflation report and Canada's employment data. Beyond that, it's the run-up to the Fed next week, the Bank of Japan later in the month, and China's policy meetings that could set the tone into year-end. I'll be watching the Aussie against the US dollar, looking for an uptrend to hold if the dollar stays soft and risk sentiment remains steady. I'm also watching dollar-yen for a downtrend to develop if Bank of Japan hike expectations firm. Dollar franc looks biased lower on Fed cut pricing, while dollar rupee has room to stay supported after the RBI's rate cut. And in metals, I'll watch gold and silver for further upside if today's US inflation print is benign. The takeaway: markets are calm and cautiously optimistic. But with central banks set to steer the final moves of the year, the next data points will matter. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.